The market starts this week off moving up. We see the S&P 500 up along with the NASDAQ 100 and gold. Bonds are down. And as we zoom into our weekly chart on the S&P 500, you can see that we've started the week off with a nice green up candle. We had that indecision candle the prior week. Again, indecision tending up, and we see that starting off with a decent up candle, first day of the latest 5-day candle. I am traveling today, so you have to excuse any background noise. I'll do my best to bring this to you as quickly and well as we can in spite of all the things going on around me. We see the derivative oscillator losing momentum. Price percent oscillator is heading up. Weekly, of course, is still in a confirmed down move. We go from the weekly to the 2-day, and of course we see that 2-day chart trying to push itself above where things ended on the prior 2-day candle on Thursday, and just not quite being able to get. We'll look at where things topped on that Thursday candle at 182.38. We look at the latest 2-day candle, let me see, 282.38. Latest 2-day candle, 282.66. So again, things are pushing up a little bit more. We see that the price percent oscillator is pulling away from the red signal line. Derivative oscillator still negative, but maybe switching over pretty soon. So we can, of course, now call this a 2-day uptrend now. There is a crossover. We were hesitant to call it that, but we will do so now. So we see that the 2-day candle is now moving in the same direction as the weekly. We go to the 4-hour chart. What do we see there? Up in the morning, up some more in the afternoon. Derivative oscillator still losing momentum, but that price percent oscillator is heading up. Of course, we don't have a jumping in point yet. We're going to have to see a pullback on that 4-hour chart before we have a trigger to pull for jumping in. And what we're really seeing so far is sideways slide. Maybe that's coming to an end. It is tending up over the last day and a half. We'll wait and see. Nothing on the S&P just yet, but of course we go from the S&P to the Qs. What do we see going on the NASDAQ 100? Not up much for the day, 0.06%, but we see the week taking off with a nice strong up candle. And again, it's just the first day, but it is nice. Derivative oscillator still losing momentum, but that all-important price percent oscillator heading up quite nicely. We go to the 2-day chart. What do we see there? Of course, again, a nice green up candle. We don't have to compare. We can clearly see that this newest 2-day candle is up higher, substantial, well, I won't say substantially, but up higher visibly than the prior one. And of course, the price percent oscillator continuing to pull away from the red signal line. Derivative oscillator is positive and growing. That is a good sign. We go to the 4-hour chart. What do we see? Well, we see things actually sliding sideways. And again, we had a sideways slide back on Thursday, popped up on Friday, and then a sideways slide. And again, up for the day, 0.06%. But we do see red spinning tops, hammer and a spinning top, indecision tending down. Price percent oscillator is moving up, which is good. It's moving up just a little bit. Derivative oscillator losing momentum. Prices above both the 2-day and well above the weekly. And of course, we had our jumping in point last Tuesday afternoon. And again, things are above that. So again, keep your eye on things. We're in that trade. Hopefully you jumped into a practice trade. We want to see how long that will take us. So the Qs is continuing to run. Of course, remember, once you get into a trade on your 4-hour chart, you then start looking at your 2 bigger charts, the 2-day and the weekly. Okay, so we're going to leave stocks, go to bonds on the weekly. And again, bonds, we can look at this weekly chart with that little wick on top, stronger wick, taller wick the prior week. Things are really sliding sideways. Derivative oscillator shows that. Price percent oscillator does too, still negative, sliding sideways. Go from the weekly to the 2-day. And again, 2-day still down, trying to cross over, but hasn't managed to do that yet. So weak, no trade here. with the 2-day in a confirmed down move and the weekly in a confirmed up move. Just not enough energy to pull things over. We go from the 2-day to the 4-hour. We can see some up in the morning and the afternoon. And again, the TLT 20-year bonds was technically down for the day. We're looking at our Heiken Ashi candlesticks, and you can see that again, the average pace is trying to move up on that 4-hour chart, but just not happening as far as the price percent oscillator and the derivative oscillator goes. Looks like the price percent oscillator is actually heading down a little bit. So until bonds shake out clearly, and those of you who are sort of getting confused because it's actually down for the day, but you see your Heiken Ashi average pace candlesticks are sort of up. What does all this mean? Until there is a clear trend, there is no trade. We keep it simple. We want to see clear, obvious trends going in one direction or another. I do want you to pay attention to one thing that we do teach here is if TLT 20-year bonds are going down, or the S&P 500, the NASDAQ 100, or gold, we also look to practice trade inverse funds. There's inverse funds for gold. There are inverse funds for bonds. There's inverse funds for the S&P 500 and the Qs. So again, get a little bit sophisticated and you can make money, practice trades of course, when the market's going down. We want you to practice that because one day, you know, this market that keeps going up in stocks will go down. Now we leave 20-year bonds and we go to gold. And of course, gold, look at the weekly chart first, continues to make us think that we're going to have a crossover going down on that weekly chart. May happen. Now, we've been fooled before on a Monday. May not happen by the end of the week, but we may have a weekly vertical crossover by the end of the week on gold. Gold up for the day just like the Qs, 0.06%. We see a green spinning top. Open box top means indecision tending up. Derivative oscillator, however, gaining downward momentum. Price percent oscillators trying to cross over. It's a 5-day chart, so we don't call a 5-day weekly candle until the week ends, but looking more and more like that. Right now on Monday, again, what do we see going on with the 2-day chart? Well, that is trending up. And again, gold was up for the day, 0.06%, pushing through the 2-day trend line. Derivative oscillator still negative, but losing downward momentum. Price percent oscillator still heading down also. So we'll just wait, watch and see what we see. But that is a green up candle pushing through the 2-day trend line. And as we continue to move along, we'll go from the 2-day to the 4-hour. What do we see there? We really see, again, a continued sideways slide with weakness. Had a big down candle on that 4-hour chart in the morning on Thursday. And of course, even with the trending up movement on the 4-hour chart, hasn't been able to get anywhere, well, hasn't been able to push above that down move on just Thursday morning last week. So sideways slide, ended the day with a doji. We see that the price percent oscillator is about flat. So we'll continue to watch. If gold does give us a weekly vertical crossover going down by the end of the week, we will let you know that. And what we'll be ready to do, we'll be ready to short gold. How do you do that? D, G, Z is something I want you to practice. That is an inverse gold fund. And of course, when gold, let's go to the weekly chart, when gold is going up, DGZ goes down, which is what it's been doing. When gold is going down, DGZ goes up. And again, it tries to track gold percent for percent, okay? It is a different price, as you can see, than what gold is. And GLD is set at 1/10 of what gold is trading at. DGZ is not. It does, however, try to move the opposite of gold. So if you haven't taken our training on inverse funds, how to make money when markets crash, I want you to do that. I'll attach that at the end of today's video. If you're listening via audio, just go to the website and search under trainings for inverse funds, how to make money when markets crash. Folks, that's where we are as we end the day on Monday, go into Tuesday. Thank you for putting up with me on this travel day. We love to hear from you. Feel free to write a CW at chartingwealth.com. If you want to know really what we do here at the channel, I do encourage you to buy our book. It's in its 8th printing. We will get a copy out to you. See the link in the show notes. If you're not already subscribed to our daily market reviews, you can do that for free by going to chartingwealth.com, and you'll see in the show notes the link to purchase the book and to become a Patreon supporter with all the great stuff that comes with that. What comes with your Patreon support? All sorts of great training, a monthly Q&A, where we get our Patreon members together and answer their questions, along with a monthly review of many of the stocks and ETFs that you ask us to take a look at, plus our quarterly chart training, our Bitcoin training with our special Bitcoin chart, and our short chart trading. Folks, that's where we are as we end the day today. We always love to hear from you. CW@chartingwealth.com. God bless. All the best from the whole team here at Charting Wealth World Headquarters.